Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. You're new to the page, go ahead and hit the like, subscribe, and notification bell. Let me turn this down because my live was extremely loud. All right, I don't know why my volumes keep going off like that. Hopefully that's better. Okay, so we got a lot to talk about today. Please don't fall for spam. Anything I say is not a suggestion for you to buy or hold or sell, right? So we know there's a lot going on with the stock market, and I always look for opportunity, right? Especially when you have geopolitical things like this happening, we look for opportunity for buys in situations like this. There are times when, you guys that follow me, you know that I sit back and I say, I'm not buying anything. I stop and I watch. And there are times when I see that there are some buys. And I saw that, I believe personally that, I'm not like most. I think that the market had an overreaction today by the amount that it was down. We know everything that's going on. I'm going to play you some short videos that's going to shine even more light onto this geopolitical situation. And but we need to be aware when there are some buys out there, okay? And so first, I want to play a short snippet of the president and what he said, and then I'm going to talk about why I think that actually this threat of all-out war could actually, in some strange way, save the stock market from actually tanking and save us from going into a recession. All right. So let's look at this first short video, and then I'll talk.
Who in the Lord's name does Putin think gives him the right to declare new so-called countries on territory that belong to his neighbors? This is a flagrant violation of international law, and it demands a firm response from the international community. So today, I'm announcing the first tranche of sanctions to impose costs on Russia in response to their actions yesterday. These have been closely coordinated with our allies and partners and will continue to escalate sanctions if Russia escalates. We're implementing full blocking sanctions on two large Russian financial institutions, VEB and their military bank. We're implementing comprehensive sanctions on Russia's sovereign debt. That means we've cut off Russia's government from Western financing. It can no longer raise money from the West and cannot trade in its new debt on our markets or European markets either. Starting tomorrow and continuing in the days ahead, we'll also impose sanctions on Russia's elites and their family members. They share in the corrupt gains of the Kremlin policies and should share in the pain as well. And because of Russia's actions, we've worked with Germany to ensure Nord Stream 2 will not, as I promised, will not move forward. As Russia contemplates its next move, we have our next move prepared as well. Russia will pay an even steeper price if it continues its aggression, including additional sanctions. The United States will continue to provide defensive assistance to Ukraine in the meantime, and will continue to reinforce and reassure our NATO allies. Today, in response to Russia's admission that it will not withdraw its forces from Belarus, I have authorized additional movements of U.S. forces and equipment already stationed in Europe to strengthen our Baltic allies, Estonia, Latvia, and Lithuania. Let me be clear, these are totally defensive moves on our part. We have no intention of fighting Russia.
So the part that you probably didn't hear, he said that we're going to make sure that Russia's going to finance these and not America. We may pay at the pumps. And so there was hinting around what America's going to do. I think that because we have this geopolitical situation happening, that the Fed will not be hawkish, meaning that they will not go up 0.5%, right, or 50 basis points, but instead they will go up 25 basis points or 0.25% on March 16th. Okay, that's what I think. I could be wrong. I'm monitoring this day to day. Oddly enough, I found a gentleman that agreed with me on CNBC. There's a lot of there's stuff that I don't agree with on Fox Business, CNBC. There's stuff that I do agree with. I agree with this gentleman wholeheartedly. Please pay attention to what he has to say.
Probably right out of the gate, they would be reluctant to go 50 because most likely the market would start building expectations for additional 50s after that. And I'm not sure they want to move that fast, at least initially. Yeah, but I do think they're very much on track. We'd have to have some kind of completely unexpected shock, and not just what we're seeing unfold with a barely more than 10% pullback in the S&P 500. That's just not going to be enough to move the Fed to the sidelines for the March meeting, in my opinion.
How many quarter point hikes do you think they need at this point? Because we're looking, okay, they have 7 meetings left this year. That's 7. Now we're looking into next year. If you think they need to get the rate up to, whatever the terminal rate is now, 2 or 3%?
Yeah, it's interesting. If you look at the futures markets, the expectation of the terminal policy rate is still below 2%. Does that make sense in an environment where 5-year expected inflation is more than 100 basis points above where it was in the last cycle? And then in the last cycle, the Fed funds rate topped out at just below 2.5%. I don't think so. So I think those longer term policy rate expectations are going to have to move northward. And I do think that will happen this year as the Fed starts to tighten. But every meeting up 25 basis points, I think, makes sense in terms of where we're headed with the Fed. They may end up getting more aggressive down the line if growth doesn't slow, if inflation stays persistently high. But at least for this year, I think they're going to start off in a gradual fashion, and then we'll see how things go. No recession this year. I don't think you're going to have the kind of Fed tightening that would really put a constraint on this economy, at least for 2022. We can have a debate about 2023 and 2024, but not a lot of visibility looking out that far at this point.
Okay, so that's what I see right now. So in some strange way, if everything plays out correctly, hopefully and prayerfully, there's no war because we don't want loss of life, right? And that because of this war, the Feds will pull back. Mr. Bullard, that was hawkish, that wanted to, if you listen to Mr. Bullard, he would raise it a whole 1% March 16th. But I believe, like the gentleman said, that we're going to have steady 0.25%, which the market could handle, which I believe is a sign of the Feds trying to land the plane softly rather than, a real hard stop. For those of you that's ever flown into Midway, the airport is so short, they got to slam on brakes anyway. But this is what I think. Tell me what you think. Leave me a comment. Do you think I'm on to something? And because of that, I see buys. I saw buys today in great stocks or great companies. I did buy some more Disney stock. Now's the time to buy solid plays that you see. Companies that are blue chip companies. Now, this is when you want to look for blue chip companies and start to establish your positions. For those of you that are new, I want you to Google what are some blue chip companies, and you're going to see a whole bunch of them. Okay, I did add to that. Last night, I added to my crypto. You name it, I bought a little bit more of it. Okay, except Shiba Inu. I think it's been holding really good. Actually, Shiba Inu has been holding strong through all of this. But the more solid coins I have, and I've added to my positions in 5 other altcoins. Okay, so we're going to leave it right there. Tell me what you think. Do you think this geopolitical situation is going to pull the Feds back to where they only raise it by 25 basis points, meaning 0.25%? I believe that will be good. Myself, I believe that inflation and higher interest rates is yet still a bigger threat to the American stock market than all of this geopolitical stuff that's going on. That's me. Let me know if you agree or disagree. I love to get your guys' side of or hear what you guys are thinking about. Okay. And in closing, I'm going to leave a video. We're going to end with this video. You can watch it if you want to or not. But it's some more stuff that you need to understand about the geopolitical situation that's going on, because whenever there's war in the history, it's over territory, minerals. It's never fully what people say it is. I'm not saying this gentleman is correct or not, but there are some interesting facts. You listen to them for yourself and make your own determination. All right, good people, make sure you check out all the links below. All right. Hey, Coinbase and Webull, that's it. And then right now, I would say is a good time for you guys to start looking at tip ranks to see if these analysts are readjusting their prices. Okay, I have a link for that below, and it will help you to pick some good solid plays. All right, good people, live, love, laugh, and learn. Check out this video, and we'll see you later.
Where does most of Europe's natural gas come from?
Comes from a mix of Germany, right, into Germany,
from Russia,
Norway, increasingly U.S. exports, imports into Europe, exports from here via mostly Poland, liquefied natural gas, companies like Cheniere and Venture Global, big moves into Poland. So really, Europe is reliant on Russian natural gas to about a third. And the danger and pressure point here, Kelly and Tyler, is that German natural gas inventories are at record lows. It's about 3 to 5%. There's not a lot of margin of error. Thankfully, the weather has cooperated. It has been a little bit warmer than normal. But the fact that we've already got elevated prices in oil and natural gas, Putin is aware of this. And everybody I talk to says he's using that as even further leverage because they're afraid of what he could do to their natural gas and energy supplies.
Is that not why the most interesting development this morning was Germany coming out and saying it will suspend approvals for the Nord Stream 2, which would then allow that Russian gas to flow straight into Europe instead of bypassing Ukraine?
This is really important. Okay, so we got this beautiful map here, big, beautiful map here, guys. And this is the Nord Stream 2, and it goes from basically Russia down directly into Germany. Now, the current pipeline system is generally coming through Ukraine. It's sort of off the map here, but it's on the south side. The Yamal is the name of the big, you might hear this in the future, Yamal is the biggest pipeline. Russia pays Ukraine about $1 billion a year as a toll, effectively, to let its pipelines run through Ukraine. But Russia can also dial the tap back. They have done that in the past. They did it in 2018 or 2008 and 2014. So if Putin can get this pipeline, which, by the way, is completely built, imagine the George Washington Bridge done, but no cars. And someone needs to sign a piece of paper to say it's open. Germany, to your point today, Kelly said, no, not yet. We may never approve this pipeline. Cost Putin $11 billion. It'll mean that Russia loses out or has to spend about $1 billion more per year running these pipelines through Ukraine. There's a lot here, and we're going to talk about NATO, and you guys just did. You talked about whether these are ethnic Russians and all the mis and disinformation. But let's be clear. A big part of this story has to do with fossil fuels, natural gas, pipelines, and money. And you can make it all big and say NATO and democracy. This is about money.
And we saw, even prior to this, incursion into Ukraine, throughout the fall, huge spikes. And our natural gas price is not telling you what the Europeans are paying right now. I mean, this was a real crisis point for them. In the past 6 to 8 weeks, like you said, it's really the weather that bailed them out here ahead of this crisis.
And it's not just Europe. I mean, this is why we were in the UK in early November reporting on this coming disaster. And by the way, the UK energy regulator just raised their electricity prices by 54%. Okay, millions of British families may not be able to pay their bill. We bring this up because if we see the same natural gas high prices in Europe as we do in the UK, and they are elevated, you're going to have millions of families. They're going to have to choose between heating and eating. Okay, and what does that mean? It means political unrest, an unhappy population, and here's the other thing, and I'll let you go. Aluminum. Aluminum prices are skyrocketing because electricity prices are up, which means you want to build a car, you need nickel. Oh, that comes from Russia. You want to build a frame for an F-150? That's aluminum. Prices are up. You want to have an EV battery? A lot of that is also nickel. So the Russian economy, while small overall, smaller than Italy, smaller than Tyler's favorite place, Canada. Okay, no disrespect to Canada. The Russian economy is not very big, but it does punch above its weight in terms of commodity output.